Gavin Stacey is Chief Australia and New Zealand Rate Strategist at Barclays Capital. Gav, very good to see you. Just take us through the statement that we got from the RBA with this decision. What does it indicate in terms of what they might do next?
I think the first thing to note is that the RBA still remains a little bit cautious about the global backdrop. Obviously, there's uncertainty in the US, there's uncertainty in Europe, and even some uncertainty in Asia in terms of the long-term growth trajectory. But I think the other clear message coming out of today's statement is that the RBA actually considered whether or not to hike interest rates again. So obviously we got some CPI numbers last week. They surprised the RBA along with the market on the high side, and I think the RBA actually noticed those numbers and is now starting to think whether or not to tighten. The global factors are keeping them at bay at the moment, but when they improve, I think the RBA will be back out there tightening again.
When do you think they will come back out and tighten, and do you think the domestic economy outside of the mining sector can handle another rate hike? Rates already at 4 3/4%, the highest in the developed world.
I think what has changed since the CPI last week is the fact that the industrial production cycle is looking a little bit wobbly at the moment. The PMI data across the globe in the US, UK, Europe and in Asia as well all sort of softened. When you're an economy that sort of drives off commodity prices, obviously an industrial production cycle which is showing signs of weakness clearly has a big influence on what you're thinking. So I think we're probably likely to see the RBA want the PMIs to reverse because they're like a leading indicator for industrial production. So get the PMIs up, and once the PMIs are back up again, then I think the RBA can start thinking more wholeheartedly about tapping on the brakes again.
When we look at the global economy and the PMIs, as you say, do you expect those to improve in the coming months, or is it simply just too difficult, such little visibility at the moment, to make a conclusion?
I think at Barclays our belief is that the US will actually muddle through along with Europe, and Asia, led by China, will continue to do reasonably well. So I think over time we would expect the PMIs to improve. But I think policy uncertainty in the US and in Europe for that matter is sort of weighing on confidence in the private sector.
Gavin, I need to ask you about bonds very quickly. We've seen bonds rally. How much of that is about concern within Australia about the domestic economy? How much of it is people looking from outside of Australia for a safe haven? Because you've also seen that with the Aussie dollar.
Increasingly, Australia is seen as a safe haven trade for the simple reason that the RBA seems to be trying to protect the value of the dollar, protect the value of bonds by fighting inflation. I suppose at some point in time here, if the RBA keeps talking tough on inflation, but in the face of high inflation doesn't hike interest rates soon, I suppose some of that safe haven flow may start to reverse. So the RBA is still being given the benefit of the doubt at this point in time, but if inflationary pressures continue to build and they don't act, then maybe some of those safe haven flows will reverse.
Gavin Stacey, Barclays Capital Chief Australia and New Zealand Fixed Income Rate Strategist. Thank you for being with us.